Welcome once again to our wonderful channel, Sniper FOREX Empire. So on this lesson, we're going to be covering market structure. So on market structure, we're going to start off with what we call wave analysis. That's for this lesson. We'll be covering wave analysis. So basically on wave analysis, that's where we are talking about our trends, right? Basically the market represents itself in form of waves, right? If you are talking about an uptrend, if you are talking about a downtrend, right? If you look at it, all you should see are waves, right? So for our downtrend, we'll be seeing our waves that are pushing to the downside. On the uptrend, we'll be seeing the waves that will be pushing to the what? To the upside, right? So basically, those are the waves that we'll be seeing in our charts. So on those waves, we have what we actually call impulse moves, right? The big moves that actually determine the trend of the market, they actually called impulse moves. If you look on this graph here, you see these bigger waves that are pushing the market downwards. That's what we call the impulse move. Then we also have the corrective moves, right, where the market will be correcting back to where it actually started from, right? So these corrective moves, those are the moves that actually determine our entry points for our trades, right? So we have impulse and corrective moves, impulse and corrective moves, thus establishing our waves, right? So the same in the uptrend, right? So with the impulse move, corrective move, impulse move, corrective move, impulse move, corrective, and that's it, right? So our impulse moves, like I have said, they determine the trend of the market. Then the corrective moves, they retrace in the market to offer entry opportunities for our trades. This will be explained further as we study our waves, right? So on establishing our waves, we basically have two rules that we use. Be it an uptrend and a downtrend, we have two rules that we'll be using, right? So if it is a bullish trend, we say price should create new highs. Those new highs, we actually call them higher highs, right? Then price should not break the previous lows, and those points will be called higher lows. So what we are saying for a bullish trend, this is a bullish market, this is a bullish trend, the trend is going upwards, right? This is an uptrend. We are saying the price should create new highs, and these new highs are called higher highs, right? And price should not break the previous lows, right? The previous lows, right? That's how our trends should be established. If we are in a bearish trend, price should create new lows, and the price should not break the previous highs, right? So in the downtrend, we are saying price should create new lows. As you can see, there are new lows that are being created, and price should not break the previous highs. We are saying when price is retracing, it shouldn't break this previous high, right? When we are correcting, we should not break the previous highs. When we are correcting, we should not break the previous highs. Those are the higher lows, right? So those are the two rules that we'll be using on establishing our trends, and we'll be able to create waves in our charts. So with this information, let's go straight to the charts and let's see how those waves appear in the charts, right? So you should also know that whenever these two rules are violated, right, that will result in trend reversals. So violation of the two trend rules results in trend reversals, right? And trend reversals, will cover them in the next lesson. For this lesson, we'll just cover on the waves, right? So let's go straight to trading view and let's get to study our waves. Okay, so here is a chart for GBP/JPY. This is a GBP/JPY chart, right? So say you come to the chart like this, right, and this is all you are seeing. You're trying to establish where the trend is heading, right? Basically or generally, you can see from this point to that very high, the market was moving upwards, right? But for you to be able to study your chart well, to establish your entry and your exit zones, you should be able to see the waves that are there in the market, right? So let's go to the tools and take a path so that we establish our waves. All right, let's take this, let's use this tool, right? So we'll start straight from this very point. So if you come from this point, you can see that we had an impulse move that moved from this low to this high. This is an impulse move, right? And it ended there, right? Then the market corrected all the way to this point. This is a corrective move, right? Then it continued rising to these highs, right? So when we're establishing these waves now, that's when those rules come into play. Remember, we said price should always create new highs, right? If you look at this high, it didn't manage to break the previous high, so we can't end our wave at that very point. We look for a point that actually breaks this high, right? So from this point, right, our wave is pushing all the way to this high. This is the new high that is being created. So this point is actually referred to as a higher high. Why? Because it's higher than this point, higher than this point, and higher than this point. So the highest point from this point was this one, right, which is being broken by this high, and price managed to create a high high. So from that point, using our rules, the corrective move, remember, it shouldn't break the previous low. The previous low we are talking about is this one. So from this point, our corrective move, we're just looking at where price is currently, and this is the last point before price pushed up. So this is our corrective move to this point, right? Remember, when establishing these waves, the magnitude or the length of the waves doesn't matter. The rules counts, right? So from this point, we have our corrective move. This is our corrective move. From this corrective move, now we are focusing on a high that manages to break this high, right? Those are the two rules that we're moving with. So from this point, we go all the way to this high. This is the new high that is being created in the what? In the chart, right? So from this point, we are establishing our waves like that, right? Then from this point, right, let's look at what price did. So from that very high, price moved down straight. It moved down straight, right? And it broke this previous low. So breaking that previous low, remember we said price will be trying to reverse the trend, right? Price will be trying to reverse the trend. So from this very spot, it's a reversal that is kicking into the market, right? Our trend is about to change, and we'll talk more, we'll discuss more about trend reversals later, right? Let's just follow the trend that we are having there, right? Okay, so this was an uptrend that we had in the chart. This is an impulse corrective, impulse corrective, impulse move, right? Hope you saw how I created those waves. And this is a higher high, higher low, higher high, higher low, higher high, right? Make sure you remember the notes that I have shown you before establishing these waves. So from this very high, right, we are creating another impulse move. Why? Because it's breaking these lows. We explained that on reversals. So this is an impulse move that came to this low. This is a corrective move that came to that high. So when we're now going down in a downtrend, this is referred to as a lower low. It's a lower low. Then this is a lower high, right? Why? Because it's higher than the previous high, but then it's lower. It's higher than this lower low, but it's lower than this previous high. So it's referred to as a higher low. So from this higher low, we'll go on to create another lower low, right? Remember the rules. Price should not break the previous high, right, in a downtrend, but it should break the previous low. So it's breaking the previous low. This is a break. So we'll refer to this as an impulse move. After this impulse move, we get another corrective move. This corrective move, remember, it shouldn't break this very high. After this corrective move, we get another impulse move. After this impulse move, you can see that this price is almost on the same level with this, so it's not really a break, right? So from here, this is a corrective move. This is a corrective move. After that corrective move, we won't end here. Why? Remember our rules. Price should break the previous low. So on breaking the previous low, price managed to come all the way to those zones, right? So this is an impulse move. From that impulse move, we get this corrective move. So this is now a corrective move, right? This is now a corrective move. Let me try to end here so that I shift my chart to the right. So from this corrective move, what is price doing? Price is now creating another what? Another impulse move like this, right? So if you look closely to what was happening here, we're creating our impulse corrective, impulse corrective, impulse corrective, impulse corrective, impulse move. So these are the waves that you should be seeing in your chart. Whenever you open a chart, you should be able to see these waves, right? So let's go to another page, then we get to study these impulse and corrective moves again. Let's go to GBP USD and try to establish the waves that we'll be seeing there. Okay, right, let's focus on this downtrend that we're having here, right? So if I'm to start from that very high, right, if you ask me to create a path or to create the waves that the market is establishing there, or the trend of the market, we'll start from this side, right, and we'll create this impulse move, right? If we notice that this is a downtrend, right, we should always create lower lows, right, and will create lower highs. Price should create newer lows and it should not break the previous high, right? So from here there we won't end here. Why? Because there is this low. Price has to break the previous low, right? So this is where the impulse move is ending. Don't be confused with this mini move that was actually happening within the impulse move. So from here we get another corrective move, corrective, impulse. Right after the impulse, we get a corrective. After this corrective, what do we expect? We expect another impulse move to break or to create new lows, right? So this is our expectation, right? So as it stands, as we are seeing here on the daily time frame, our trend is still a downtrend and is still going down. That's GBP USD. That's just creating impulse and corrective moves, or our waves with the rules that I just gave you, right? The next instrument, let's just move to gold and get to establish the waves there. Let's change the time frame. You can establish these waves on any time frame of your choice, any time frame that you so desire to work with. You can see these waves, right? So on gold, we can see that gold is actually pushing up, right? So let's try to establish the waves right from the low that we have there, right? So from this lowest point, we can see that gold created this higher high, right, and it created a higher low, right? From that higher low, right, we managed to create another higher high. Then from there, higher low, right? From there, we won't end here. Why? Because this point is lower than this point, right? We go to this higher high. After that higher high, we came back to this higher low, almost to this low, but it didn't break this low, right? After that, we created another another higher high. After the higher high, what do we expect? We expect a corrective move. And where does it end? We don't know, right? We don't know, right? So I will just end with my waves here, right? So this is what we have on gold. If you are asked to establish your waves, this is how they'll be looking like, right? Impulse, corrective, impulse, corrective, impulse, corrective, impulse, corrective move, right? So this is an uptrend on gold, and this is how the waves are, and this is how you draw your waves. Always remember the rules that I have told you, or that I have shown you, right? So from here, I'll switch a little bit to what we call synthetic indices, so that I'll just show you one of the synthetic indices, or any synthetic index that will actually show you this way, right? So these waves will appear on any market, be it a cryptocurrency market, currencies market, synthetic indices, stocks. You will always see waves. When you open a chart, the first thing that you should be able to establish are the waves before you determine where you're going to enter the trade. So on this very instrument, this is step index, right? So I had already drawn the impulse and corrective moves. This is actually a downtrend that actually lasted long, right, on step index. So you can see from this reversal, we'll talk about reversals. After this reversal, we got our first impulse, corrective, impulse, corrective, impulse, corrective, impulse, corrective, impulse, corrective, and the wave continues just like that, right? So the first thing that you should do whenever you are analyzing on market structure is to determine whether you are in an uptrend or downtrend. And how do you determine your waves? I have told you the rules. I've shown you the rules that you use, right? So the rules are very, very simple. Bullish trend, price should create new highs, that is higher highs. Price should not break the previous high, previous lows, that is lower lows, right? If it is a bearish trend, price should create new lows, lower lows. Price should not break previous highs, that is lower lows. These are just the rules that you use on establishing your waves, right? So when you're creating this wave, have these two rules in your mind, and you'll be able to create your waves well, right? So that's on our waves, right? So I didn't actually draw some things here. Like I was explaining, these will be lower lows, right? And these will be lower highs if we're in an uptrend, if we're in a downtrend, lower highs, right? So you will also do your homework and try to label for an uptrend, right? So from this point, all these will be lower lows, all these will be lower lows as the market is pushing down. All these will be lower lows, all these will be lower lows, right? And all you are seeing to the upside, there will be what? There will be lower highs, right? So if it is a downtrend, you should always get lower highs, and the trend will be moving like that, right? So that's for a downtrend. So for your homework, you're going to establish an uptrend, and you're going to draw the waves and label your lower lows, lower highs, lower lows, right? If you want me to correct you on any of the waves that we have established, you can always inbox me or try to communicate in the comment section, right? So thank you for watching this video, thank you for watching this lesson, thank you for following our channel, right? Always remember to like, share and subscribe.